So at this stage here, we've obviously got a little bit more evidence that's starting to stack up against this top edge up here and allowing us to make some nice easy decisions to sell into these higher prints. I've taken another bit of short business and I'm making some monies again. So again, I'm putting another stop in at break even. Stops in at break even again, guys. I've managed to sell some business just on that retested high. And I've got a little stop in at break even. That was pretty easy, wasn't it? Pretty easy? Pretty easy. Let's take a look at the internals. Because obviously there's still some bids coming in here from the market internals. At the moment, they're running at 53s, 70s. So not a lot of extra buying up here, not a lot of extra buyers here. So I've taken another little short position. I've got into another scalp trade just there, and I've managed to get a couple of ticks. I'm going to get another stop at break even by the looks of it. And I'm just working these just now. Now, I'm trading against control. I'm trading against control. So that means I'm not selling it the way down at the bottom edges, guys, because that's a stupid, dumbass trade when I'm trading against control, right? There are buyers in this market. Does everybody get it? Does everybody understand? There are buyers in this market. Buyers. If you want to sell, you know you're on a mugs trade, right? You might say, what the hell are you in it then for? Because a commercial sells these things. A commercial trades these opportunities. This is part of a commercial opportunity. It's not part of a retail opportunity. It's not a locals opportunity, because the way that this trade evolves, you all know what's going to happen. It's going to look something like this. That's what's going to happen. It's going to look something like this. It's going to be really difficult to make money trying to be a seller. And that's what it's going to look like. And as a seller, you know that's going to be tough, right? Now, you either have to be able to exit or trade pristinely the way we're trading, which has taken 4 or 5 trades, and we've managed to make stops at break even in every single one of them so far, or you just don't trade it. You do not trade it. Don't deal. If you don't know how to trade, if you don't know how to deal, don't take these trades on. If you're not getting that pristine price like a commercial gets, you shouldn't be trying to deal up here as a seller. Should only be trying to deal as a buyer, because you, the buyers, have control of the book. And it's not changed, guys. It has not changed. Until those guys piss off, we leave it with the buyers. You try and be with the buyers, you stick with the buyers, you go ahead with the buyers. Nothing else to do, guys. Nothing else. When we see the market evolving from the S&P, we can obviously watch the VWAP, for example. So when does this market change control? Well, we can see where the VWAP is from the open, can't we? This market changes control when we go through these levels. Now, obviously, the last demand that we've got, one would imagine you would all agree that the demand is here. Well, that demand ties in beautifully with where the VWAP is. You see it? So in other words, above here, you should be trying to buy for the squeeze. Below here, you should be trying to sell pullbacks. That's what we talk about when we're talking about control. Okay? So when we're talking about control, that's what you're doing. You're a buyer above here and a seller below here as a local, as a retail trader. That's what you should be trying to do. That's the point of control, to try and keep the retail traders on the right side of the book, on the right side of the trade. If you're going to be selling this like a commercial, you can't be selling, for example, here. You can't be selling there. You can't be selling here. You can't be selling here. You can't be selling here. You can't be selling down here. If you're going to sell this like a commercial, you've got to be selling here. You've got to be selling here. You've got to be selling at these higher prints. It's the only way. Look, if you sold those higher prints, you don't have any problems in making money. But if you've got terrible trades and you're trying to trade it like a retail trader, there's no way you would have made any money during this period. I've made 5 winning trades through this. 5 winning trades by selling into these touches, into these top edges. And they've all been exceptionally successful. It's not gone anywhere, but I've had 5 winning trades as a commercial seller. So you shouldn't be looking at these the way I look at these, unless, of course, that's the way you want to decide to trade. But if that's the way you've got to decide to trade, the thing you can't become is a retail trader in your execution skills. If you trade like the commercials, you've got to trade like the commercials. If you're going to trade like a retail trader, you cannot trade like the commercials. You've got to wait until we get that control shifting to the downside. Otherwise, you should be buying when the price turns around. When that price turns around, you should be buying. So it should be BSG squeeze buy trade, for example, here. Then it should be a BSG squeeze buy trade here. And then it should be a BSG squeeze buy trade here. And then it should be a BSG squeeze buy trade here. And it should be a BSG squeeze buy trade there. That should be your trades at the moment as a retail trader. That's what locals are doing, waiting for the commercials to say, thank you, I've had enough. I'm going to work sell side. I'm going to start crossing the spreads to get business, because whilst the buyers are still in, there is no sell. There is no sell. How can we tell whether the buyers are still in? Time segmented volume. OBVs. We can start watching OBVs, time segmented volume. So if we put time segmented volume onto the screens, what does it look like? Well, time segmented volume onto the screens. We can start watching for that volume to disappear. Grab the time segmented volume, bring it up. Grab the time segmented volume, bring it into your charts, and then just watch for the volume. Now, obviously, that first volume is always going to be the biggest volume by a country mile. And then looking at these subsequent volumes, what you're looking for is a big drop-off in volume, right? You haven't really seen it. You don't really see it just yet, but now you see it here, don't you? Now you see the big drop-off in volumes on those upticks. Going from this phase here, where the volume is still pretty meaty on the upside, to this volume here, where there is absolutely no buyers to be seen anywhere, that's when it starts to become easier for you guys to say, you know what, I'm now going to start selling the highs. I'm going to start working that exhaustion print at the high prints, because you don't want to be trading absorptions, guys. You want to be trading exhaustions. That's what exhaustion looks like. That is what exhaustion looks like. Yes? That. There. That's what exhaustion looks like there. There's no sellers in here. Look. The sellers are disappearing on that move. That's exhaustion. That's what you want to trade with control. If you're trading against control, that's what you want to trade up here. You can afford to cross the spread on this buy because it's with control. So you can afford to get filled up here, for example. You can afford to get filled up here. But at the top edge, guys, in that scenario there, you cannot afford to get filled at bad prices. You've got to sell the tops. You've got to sell the tops. You've got to work into that as a short trade. And that's where you make the big money, through that exhaustion phase. And you can see what's happened. We've had a very, very successful outcome. A very, very nice profit, guys. We've made a killing on it. And we've taken control. Well, we haven't actually really taken control, because we've really got to sweep this demand area here, haven't we? So when we look at volume profile, we start going through the volume profiles to see just how the volume profile evolved at those higher prices. And you can see that that POC level is all taper above here. So the sweeping of this area opens the door to what? Selling on upticks now, doesn't it? So now we've got this opportunity to maybe sell into this pullback phase here. That would make an awful lot of sense, wouldn't it? And what are we going to be watching? We're going to be watching exhaustion prints coming into that uptick. We're going to be watching for exhaustion prints. So there's the sell trade. You can see where the retail traders were doing it. You can see what was the commercial trade was this trade here. So there's a perfect example of commercial sellers against retail buyers or locals. It is technically exactly as we teach. It's exactly as difficult as we suggested it would be to be a seller on the uptick phase, even though we start to recognize some opportunities through the analysis of things like the specialists. We can see this whole trade from the S&P here. We'll take the specs off since it's clouding what we're seeing. You can see Warren goes short, and we can see that the internals go short. But it doesn't make the trade any easier. It still means that you've got to still work those higher prints, guys. You cannot be trading these as market orders. You've got to be trading these as limit orders. You've got to trade these as limits. And that's what a commercial accumulation looks like. The accumulation is perfect in that location, isn't it, when you think about it? All good. And of course, as Greg rightly mentioned, thank you, Greg, for showing that you're the only one that's paying attention to that. As Greg rightly mentioned, that's the double blue strike. That's the double blue strike that we gave you in the tweets last night, guys.